Hey, everybody, we have Tatiana Ivleva-Lopez from Prosperity Home Mortgage here for our Mortgage Minute. Tatiana, are you wearing the naughty or the nice hat today?
I'm wearing a naughty hat again.
Oh my gosh, it's been naughty 2 weeks in a row.
I'm being very naughty.
All right, let us have it.
All right. Let me tell you what happened. So the rates in the week of April 12th to 18th increased slightly. You can see here they're at 7.43 on conventional, 6.9 on FHA, and 7.62 on jumbo loans. So what happened? Our Federal Chairman Jerome Powell said that Jerome.
No, he can go by Jerome as far as we're concerned.
Wait, who is it?
Jerome.
Oh,
Jerome.
Right? It's Jerome, right?
Jerome.
See, you don't even know.
It's Jerome Powell.
I'm not gonna say his name. I'm just gonna say Federal Chairman.
Yeah. Sorry, this is crazy.
Jerome. I think it's Jerome. I don't know.
All right. Anyway, so Henry, what did Henry say?
Okay. So Fed Chairman said that we do not expect that it will be appropriate to lower our policy rate until we have great confidence that inflation is moving substantially down towards 2%. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decision on policy. So, and because of that, there is a possibility that potentially rates could go higher. And the best case scenario, they'll just stay the same. But so far with Feds not planning to lower the rates, there could be potential for rates to go up. And this week was the immediate reaction to his commentary.
So let me ask you real quick. So when you say that there's a chance for the rates to go up, you're saying the mortgage rates in response to the comments, but you're not saying that Powell is going to come out and raise the rates.
Like they haven't made a shift, right?
Correct. No, I'm talking about the mortgage rates.
Okay, gotcha. Okay.
Yeah, because last they were still planning on maybe lowering the rates a couple of times closer to the end of the year. But so now it seems like we'll be lucky if we get there to that place, right?
Exactly.
Yeah.
Okay.
So what have you seen with applications, mortgage applications? Have you seen them dropping down quite a bit? Are they staying pretty steady?
Well, definitely they're very sensitive to interest rates. When rates go down, loan application percentage goes up, and then it stalls. We did have some uptake in applications, but now it's getting down.
Okay.
Yeah.
Okay.
Do you feel like people are starting to settle in and get used to the fact that these are the rates? I mean, this is the general playing ground of the rates.
It's true, nobody is really expecting the rates to go down drastically anytime soon. So people are settling on that idea that these are the rates, and if you need to buy, you need to buy. Buy now, refinance later.
Exactly.
Yeah. And we're not going to see, the 2s and 3s and 4s again. Maybe 4s in a weird situation. But
that was like some free money right there.
Money
the 2s.
for a little bit. Yeah.
So nice.
This is actually a healthier rate right now, just for the economy overall, I think. Okay. All right. So anything else on interest rates?
That's it.
Okay.
Nothing else.
Well, what I wanted to ask you about today is we constantly have conversations with clients about appraisals and inspections and so on. I know how we explain the appraisal and how we explain what it's for and what it's needed for. But I'd love to hear your take on it. Like, can you go through and just give them the official Tatiana definition of appraisal and what it's for?
Yeah.
All right. So yeah, let's do that. I don't know if it's official Tatiana definition. I actually Googled it.
Well, then
But
it's official.
it's official,
That's
yeah.
right.
But what's appraisal? It's a professional opinion on the value of a home, right?
Okay.
And when someone is getting a mortgage, the mortgage company will require for appraisal to be done. In some circumstances, actually, when there's significant down payment, and typically, when it's a strong buyer, when it's primary residence or second home, there is potential for us waiving the appraisal requirement, but that's not going to happen if it's investment property, if it's some not typical type of property, like maybe co-op or mobile homes or multi-unit properties, and if it's investment property, for sure, and it's less than 20% down payment.
Okay.
So why do we require this? Why is it needed? Because bank will lend money percentage based on either sales price or appraised value, whichever is lower.
Yeah.
And I just want to give you an example. So basically the bank wants to make sure that the buyer's purchasing at the market value, right? So that's why we're doing it. So let me give you an example. So let's say the price is $1 million, just to make it easy, for easy math. And the minimum down payment is going to be on conventional loans 5%.
Okay.
So the buyer is putting 5% down, 950,000 loan amount, which is 95% loan to value, right? So they
Okay.
borrow 95%. 1 million is 100%, 950 is 95. So what if appraisal comes in at 980? It comes in lower.
Yeah.
What happens then? Then if we keep the same loan amount, it's not 95% anymore, it's 97%. And 97% is not allowed on conventional financing in this price range, right? So they need to be at 95%. And remember, we are lending a percentage of whichever is lower, sales price or appraised value.
Right.
So with that, if we have to stay with $1 million sales price, then we need to lower the loan amount to 931,000, which will be 95% of the appraised value, 980.
Okay.
And because of that, the new payment, down payment is 69,000 versus 50,000.
Right. So they'd have to make up the difference at the settlement table.
They have to make up the difference at the settlement table. That's why it becomes, more expensive, unless they're able to renegotiate the sales price. Otherwise, this is going to be the scenario, and the bank will lend only 931,000.
Right.
Okay.
And that's where your friendly local real estate agents come in, is negotiating down to that lower appraised value,
That's
right?
Exactly, and you're very good at that. So
Yes. And another way is sometimes can't you request a reevaluation?
So the process when appraisal comes in, and let's say it comes in lower, right? Our reviewers look at the report to make sure that there are no discrepancies, that what they can immediately see on the report. And if they don't notice anything wrong with it, they will reach out to you. Well, they reach out to me, and then I'll go back to you and to the client and say, take a look at the report. Let me know if anything is wrong, anything is missing, you disagree with something, you want the appraiser to reconsider. We need to give them legitimate explanation why we think maybe he needs to look at better comparable properties, or maybe a bedroom is missing, or something is incorrect. There's the appraiser didn't take into account maybe a quieter cul-de-sac versus other properties or on a busy street, whatever the reasoning might be. You know, we present it to the appraiser, and appraiser will review and let us know, well, no, I cannot make adjustments to these bullet points because of whatever reason, or agree with us and say, well, you're right, I'll make adjustments, and then potentially increasing the appraised value to the point where we need it to be, or you know, whatever he thinks is relevant.
Yeah, and I think even with you, we've had it go both ways. I know you've contacted us once. The most recent one, we looked at it, and I remember saying, no, they were actually lucky to get as high as they did, and that's just because of the competitive market, right? Everybody's having to bid a lot higher than usual, and then sometimes there have been. Do you remember that one where you found it and you're like, why are they using these comps?
Oh,
and
yeah.
you sent others and they reevaluated and we got it handled.
Well, and I think that's, and correct me if I'm wrong, but that, I think, you know, because the banks are using it, a lot of times people will look at an appraisal as being a totally objective process. And it is fairly objective, but it's still done by a person. So you can, you know, we put together an appraisal package, and in that appraisal package, we give them the number of showings. We tell them how many, you know, offers we received that were above ask. We present a story, because the story affects the appraised value in the appraiser's mind. So, you know, there are situations where we get appraisers that are appraisals that are abnormally low, especially if it's an appraiser that's not from this area.
Right.
He does something and doesn't recognize the market. So it is a fallible system, but is that right? If can have faults.
Yeah.
It's not a perfect system, but it's a good system, and you just have to know how to influence it as much as you can to get it to where you need it to be.
No, yeah, absolutely. And you know, it is professional opinion. It's unbiased professional opinion. You can ask 3 different appraisers. They might come up with different values, just within 10% range or so, because there's really no formula on how much adjustments they need to give for one item on the property than other.
Right.
So there's always going to be that, you know, different opinions on that. But it is a professional opinion. We have to follow it. And as you mentioned, actually, you had a good point. If appraiser is not from the area, so it's very important to work with a lender, a local lender that actually works with local appraisers. You don't want to have an appraiser that works only in DC to come and appraise property in Loudoun County, right? Because they don't know the market. Just,
or even worse, somebody from like Virginia Beach, just because they're licensed in Virginia, but they come and do it from the
exactly. So it's very important to work with the right people.
That's something brilliant. So for the clients, they're probably stupid too. For the client's perspective, though, this is what the appraisal contingency is for. So this is how they have the protections against that extra $19,000 coming out of their pocket with that appraisal contingency. And if they waive that, then that's the risk they have. So we have to get with you, the lender, to make sure they have enough liquid assets to be able to cover the difference, that it's not going to challenge their DTI, that everything's going to be okay if they end up having to come out of pocket for that.
Exactly. And again, this is a great point, because this is the this is the worst case scenario, right? Because it's the maximum they can borrow from the bank, 95%. What happens if someone is putting 25% down payment, or you know, or even 10%? They might not need to come up with that extra money, but they might, their terms might be different. So when there's a situation when a buyer needs to waive that appraisal contingency to win the contract, then we as a team meet with, you know, we all talk and discuss what could happen if appraisal comes in low. And then I'll tell you, okay, if appraisal comes in low at X amount, then this is what's gonna happen to your terms. Maybe the rate is gonna change, maybe you're gonna have mortgage insurance, and then it's gonna be a decision are we okay with that or not? Does it
Yeah.
even, worth bothering, worrying about it or not?
Right.
Yeah,
Yeah, because it affects not only the extra cash they have to put down or towards the settlement, but also what it does to their DTI with what you're talking about with
yeah,
how much does the rate change? Does it affect this? Does it kick them into a whole new program where everything just changes? So I know you always tell us, okay, they can bid this much higher and waive an appraisal contingency, but then also I know you've asked us, what's the worst case scenario and what it's gonna combat. And
Yeah.
so it's like this game. And then
Balancing act.
obviously with the buyer, it's like, okay, what are you comfortable with within this realm of what's feasible and what can happen? And it's
And that's the beauty of the appraisal gap, because
yeah,
if you have a good lender and we know around about where it's gonna
Yeah.
come in, then we can establish a strategic gap that
Yeah.
mitigates their risk, makes the offer stronger, and everybody wins all around.
it's kind of the best of both worlds. I love the appraisal
Yeah,
gap.
agreed.
Yeah. I guess Tatiana, tell us what the appraisal gap is in case people don't understand
I was going to ask you the same question.
that.
All right, I'll take it.
Okay.
Okay. So the appraisal gap is when you put the appraisal contingency in, you can establish a gap. So let's say in this example, there was a $10,000 appraisal gap. So the appraisal came in $20,000 too low. So with the appraisal gap, the buyer is automatically agreeing to pay $10,000 of that $20,000. So then the remaining 10,000 is negotiable. So if they can or cannot come to an agreement, if they can't come to an agreement, the buyer can waive the contingency.
Mhm.
If they can come to an agreement, then the buyer just pays that additional 10,000 and they go forward with the transaction. So the buyer limits their exposure, so they're not exposed for
Right.
the whole 19,000 in this example. They put a cap on their exposure, but they present in a much stronger way than somebody that just had an appraisal contingency. And it works really, really well.
That's right, because if it doesn't appraise, like without a gap, if it doesn't appraise and they can't come to an agreement, then the buyer can say, peace out.
Yep.
You know, I'm moving on, and then the seller is back on the market
Yeah.
and having to go through all that again. So a gap is really, it's a
Yep.
really good thing.
And most sellers have an idea. For example, on this property here, the seller probably has an idea that it might appraise at 980. You know, they're just trying to stretch
Yeah.
the market. So if you put a $10,000 gap on that, they're like, well, hey, at least I'm going to get that extra 10 grand, even if it comes in low. So that just strengthens that offer and mitigates risk.
Yeah. Those are facts.
That's
Well done.
yeah. Okay.
And a lot of times sellers know, like have a good idea, like it's not going to appraise even for my asking price,
Mhm.
but hey, I can do that in this market because I am overlooking the Potomac, right? It's like, it doesn't matter. Have you guys seen that listing for over $55 million? I think it's on Bull's Run or something.
No, is there a new one? Because there was the 39 million. On
There's
Bull's
a
Run.
55 million. Yeah.
We have to
There's
go.
22 million one on the Potomac.
Woo.
Nice.
I was holding open for a couple of weeks ago.
Really? Did you take
Beautiful.
some video of yourself going through it? Mm.
Just videos, not myself.
You'd get more viewers if you were on there. Of course, woman.
All right. Any other questions?
No, or is this the last slide? Because I feel like we probably
Jumped ahead if it isn't.
sidetracked you. We got all.
No, this is this is last slide on the topic, but I have one more.
Yes, finally, yay!
Finally.
All right, everybody, if y'all need anything with lending, reach out to Tatiana. She can
Yeah.
let you know what your budget's going to be and help you with all that stuff.
I do have one more question on appraisals.
Okay.
Just clarifying so that people know, because we do get asked this, who pays for the appraisal? They ask that and they say, is this a fee my lender covers?
Appraisal is paid by the buyer.
Paid by the buyer. And then let's say the appraisal, we do want to have it, what's it called? Reinvestigated, why am I not remembering the word?
Regurgitated?
Nope.
Now I forgot it.
I lost it.
Reconsider,
You want to
reconsider.
dispute it. You want to dispute it.
Reconsider.
Reconsider. Thank you.
Thank you.
Yeah.
Is there another fee for reconsideration?
No, reconsideration is free, and I'm talking about, you know, with my company, the Prosperity Home Mortgage. The
Yeah.
reconsideration is free, and if appraiser does not change the price, the value, and you disagree with that decision, and our reviewers disagree with the decision, we would order a new appraisal free of charge.
Oh, nice. Okay.
Very good.
Wow.
And that's
good.
not true with every
Mm-mm.
lender, so very good.
Okay.
Yeah.
Thank you.
You're welcome.
Thanks,
We'll see you
Tatiana.
next week.
Bye.
Bye.